Hello everyone and welcome to a new episode of Investing Fool. It's the first video of 2025 and it's the first rebalancing of 2025. But before that, first of all, a very happy new year to all of you and your families. May 2025 bring lots of learnings to you, lots of conviction in building your strategy, and if you're executing your strategy, then may it help boost your conviction in your strategy. Remain invested in the markets, and if there are good returns in the year, that would be definitely a bonus. So we had to put out this rebalancing video this end of December rebalancing yesterday, after the rebalancing, after the market close, but I couldn't put it out due to some time constraints, so we are going and putting it out today. And it's one of the few instances when I'm actually recording this video when the market is open. So in today's video, we will talk about the rebalancing changes for our core portfolios. There are three changes over there. We'll also talk about the Nifty top 10 portfolio. There are a couple of changes on the Nifty top 10 portfolio. So let's get started without wasting much time. And while you read this disclaimer, and I request you to read this disclaimer, one thing I want to dwell upon is that whenever we are sharing any stock names or anything in these videos, my intent or my purpose is not to induce anyone or to influence anyone to buy or sell any of the stocks, right? As a DIY momentum investor, your portfolio might look much different than me. The stock names would look much different than me. It depends on a whole lot of factors. Your rebalancing day could be different, your rebalancing frequency could be different, your universe could be different, anything like that. Your returns could be much more than me. My returns have been very modest as a DIY momentum investor. But the more important point is that, as we always say, we look at the portfolio level, not at the stock level. The stocks can change, something can go out, like come in, go out, come back in again, go out, back again, right? All of those things keep happening, but what matters most is at the portfolio level and not individual stock names. So that is never the intention. So please do your own due diligence before investing. For anyone who is new to this channel, we have been tracking these portfolios for some time. Our core portfolio we have been tracking for more than a year, and the entries, exits, the constituents of the portfolio, what stocks we had historically held in the past year, and all those information you can get on the portfolio link. So the portfolio links are present in all the video descriptions, so you can go check them out. And if you want to be a part of this journey and to learn in this community, so please consider subscribing to the channel as well. Let's get started. So we are at the first rebalancing of 2025, or maybe the last rebalancing of 2024, and where are we overall in terms of the portfolio and the market? So December month was refreshing in the sense that after two consecutive red months in October and November, December was green after some time. If you remember, we had taken in the mid-November rebalancing, we had not entered any new stocks, right? Because the equity curve of our portfolio as well as the Nifty 500, which is our benchmark index, both were below their 200 DMA, so we didn't enter in new stocks. But we finally, during the next rebalancing, when we assessed the same thing, that condition was not being met, and we entered into some new stocks. From like November 15 to the start of December, the portfolio was partly in cash. It was around 22% cash. From December again, the portfolio was full. There was no cash position at all. So December the monthly performance was around 2.3%, and at the end of December, our drawdown, which is from the all-time high that we achieved, I think somewhere in October, we are still down around 9.1%. Okay, and broadly the markets are also down around the same level. Overall, for the calendar year 2024, our pre-tax returns were around 27%. Versus the benchmark index of Nifty 500, which was around 15.2%. Both of these are pre-tax. Now, in terms of the rebalancing update, which is the focus of this video, right? We had 3 exits in our core portfolio and 3 entries. Now, the composition of these stocks in terms of market cap remains the same. So we actually exited 1 large cap, 1 mid cap, small cap, and we entered also 1 large cap, 1 mid cap, and 1 small cap. So the market distribution overall of the portfolio, which you can see on the right side, it has remained the same from December 2024 to January 2025. So small cap is around 30%, mid cap is around 40%, and large cap is around 30% in the portfolio as of now. The third point is that trending sector helps, but not always. This is regarding the exit. So we'll take a look at the charts of the exits as well. But the point that I wanted to illustrate is that two of our exits this time, one was from the pharma sector and one was from the healthcare sector. So both of these sectors have been doing good over the past year or so, and pharma being defensive, pharma is actually the best performing sector in the past 1 year as well. But it doesn't always mean so. Mostly having sectoral tailwinds would help your case. So if you have more stocks from a sector that is performing too well, which ideally most momentum investors would have, they would get into trending sectors and they would rotate out of falling sectors, right? But it doesn't always help your case. There could still be instances when when your stock is from a very performing sector, but the stock doesn't perform or lies flat, the momentum starts flattening out, and so whenever the exit signal comes, you have to exit those stocks. So that is the part and parcel of the game. So you can still be in a trending sector and still be losing out on a particular stock from that sector. Okay. Let's take a look at some of the exit metrics. So we will take a look at the sheet as well in some time, but overall the winner percentage, which is like if we take 100 trades, how many of those trades are winners and how many of those trades are losers, right? So winner percentage has declined. So for the first time it has fallen below 40% now. So 38.4% of our stocks of our investments have been winning investments, and 61% of our investments have actually been losing investments. So all of the three exits that we made this time, and let's go to the sheet and check them out. So all of the three exits that we made this time have been loser stocks. So you can see all of these three here are in red. So all of these are loser stocks. So that's why the composition of losers has increased and those of winners has decreased. Now the average gain on winner has remained unchanged at 24.8%. This is because there were no new winners this time, but the average loss on loser, that has improved. So how much loss an average loser is making versus how much gain an average winner or a gainer, right? So if we look at that difference, the loss on these recent losers, so you can see the losses, right? It's like minus 3.3%, minus 7.2%, minus 6.4%. So these are less than the average that were there for the overall portfolio. So they have helped to bring the average a little bit down. So the average loss has improved from minus 11.3% to minus 10.9%. Average holding period has also actually decreased. So this has been decreasing from the past two rebalancing cycles. And why this has been happening? Because so sometimes when you exit stocks which have been there in the portfolio for too long, right? So for example, there is one stock in our portfolio which is there from December 2023. There have been stocks that are there from, like, let's say February or March. So if those kind of stocks get out, they will increase the average holding period because they will push the average to the other side. On the other side, if there are stocks that are entering and exiting your portfolio very quickly, so they will bring the average down. So somewhere we hit that mark of around close to 3 months. So 85-88 days was around close to 3 months. So that is the average period a stock spends in the portfolio, right? So that, but somewhere we have hit sort of a ceiling, and we are like maybe consolidating, if you want to talk about it as a curve, but we have not been able to go beyond that as of now. And this is because many stocks that are coming but rotating out quickly, because after coming they are losing their momentum. Okay, in the Nifty top 10, we will discuss about this later in the video. So there are two exits and two new entries. The very, very surprising thing in Nifty top 10 is that only 17 out of the Nifty 50 stocks are qualifying to be even ranked in the portfolio, right? So there are multiple filters that we apply. You can check the strategy as well on the videos of the Nifty top 10 portfolio. But after applying all these filters, your job is to select 10 stocks, right? The top 10 stocks in the Nifty top 10 portfolio out of 50 stocks. But after applying those filters, you are getting only 17 stocks. So you have to pick 10 stocks from those 17 stocks, which is a fairly tight thing, right? And Yeah, so we will talk about the Nifty top 10 portfolio later. The average win also has reduced there. We'll talk about that. But let's first take a look at the exits and entries of our core portfolio. So if you see here, this time I have actually not mentioned the stock names, and I have purposefully like hidden the stock names from the top left here as well. This is because although I do write like no financial recommendations in bold in every slide of our videos, but this is just to take extra precaution. I do not want anyone to get influenced in any way that I'm recommending buying or selling on any of these stocks. So as I said before, the stock names do not matter. We want to see what characteristics those stocks are displaying, right? What general trends the stocks are displaying after they're coming into the portfolio or as they are going out of the portfolio. So that is the more important thing. We'll look at their charts, but the individual stock names you can like go and check on the portfolio as well, you will find, or if I show the portfolio somewhere you might get to see it, but that is not the overall that is not the larger purpose of discussing these things. Okay, so we have stock 1, stock 2 and stock 3 here. Stock 1, you can see, so we entered around here, and we started gaining immediately, right? So you started feeling really good, but then here we kind of broke down. It couldn't cross, like it did cross this level a little bit, but it then fell down very very quickly. And now if you look over the long term, right, so from almost from the mid of May, right, so this has been almost like 7 months, the stock has done nothing. So we exited around here. The loss was not too much. So you can see all the three stocks that we have exited this time, all of them are losers, right? But the loss in each of these stocks, we have seen much worse losses before. So you can check the previous video that we put out on the channel. It was about the biggest losers and the biggest winners, right? So in those we had seen stocks fall by like 25%, 28% as well. But here if you can see, the losses are also modest. So stocks are basically not going anywhere. So this is in general what is happening with the market, right? The market is not going anywhere. It's not like decisively falling too much, or like even trying to go up higher. It mostly has a little bit of negative bias, but then there is literally just no clarity. The market is just stagnating around a point. And similarly the portfolio, that is what you see in your portfolios as well. And the losses, when you see stocks are seeing some losses but then again recovering, but they're not able to take out the previous highs, and then again some losses. So stocks are also showing similar kind of behavior. So the losses that you see in these stocks, they are pretty modest. None of these are even like so the largest loss is on stock 2, right? It's at 7.2%. Look at the time frames for these stocks. While stock 3 has remained more than 3 months, which is kind of the average for the portfolio, stock 1 has rotated out in just 30 days, right? So it just remained in like for a month, and within a month its momentum score, if you look at the stagnation over the past 6-7 months, the momentum score became so weak that it actually fell beyond the top 50 ranks. So if you see the exit criterion for all these three stocks, all of these have rotated out because of the worst rank held, or WRH mentioned here, which is 50. So any stock that whose rank is beyond 50 on the rebalancing day, we kick those stocks out of the portfolio, right? So all of these stocks have fallen because of that exit criterion. Yeah, so while stock 3 has remained for more than 3 months, stock 1 and 2 have rotated out pretty quickly, and these kind of stocks actually bring your average holding period down. If we look at the chart for all of these, you can see that all of them have seen downtrends, right? But when we contrast them with the new entries, and again with entries the same thing, I've hidden the stock names here. I'm just mentioning stock 1, 2 and 3. For details you can anyway check out the portfolio link that is public all the time. But the major thing that you see, if you see the difference with how these charts are trending, they're trending down versus how these charts are performing, right? So you can see all of these, like the trend is decisively up, like there is no fall like what we have seen in the previous stocks. But this always happens whenever you're taking any new entries. You are taking those new entries because those stocks have like higher ranks in the momentum screener, right? And why they have higher ranks? It is because they have performed very nicely in the previous months. Maybe if you had done a ranking here at this point, maybe this stock would not have come in the top ranks, right? Because the stock was consolidating for some time. After the stock runs up quite a bit, it comes decisively in the top ranks in a momentum screener, and you have to take those bets and you have to get in those stocks. But it might happen that the stock continues to go higher, it can consolidate here, or it can start falling from here as well. So many times it happens that you get into a stock which performs, the rank improves, you get inside, and somehow the stock start consolidating or falling from there, and either you have to get out or you have to wait, and just holding that stock, not getting a lot of returns, right? So that is kind of expected as with any systematic strategy. And yeah, so look at the returns, the past year returns for all of these stocks. You can see one of them is a small cap, so this is 26,000 crore small cap, this is 65,000 crore mid cap, and this is 1,24,000 crore large cap. The one important thing is that all the three stocks that we are like bringing into the portfolio this time are from different industries, and they're not really from any like trending industries, I would say. Okay, one of them might be. So the first stock, the small cap, is from financial services industry. The second one is from IT industry. So this is kind of a trending or a defensive industry that is currently in the top three if you look at the 1 year returns. And if you look at the third stock, it is from the hotels industry. RSI is around 65 or more for all of these stocks. So some of them might be getting into overbought territory pretty soon, but that is kind of expected in all the momentum entries that you take. 1 year returns, you can see amazing here, like 216%. 1 year returns, this is at 62%, and this is, even though it's a large cap, it has returned 1 year. It has had a 1 year return of 94%. So that's pretty much it. And now let's take a look at the Nifty top 10 portfolio, and after that we'll come back to the auto point. So if we take a look at the Nifty top 10 portfolio, so we had discussed about this marquee stock, this famous stock that is a household name, HDFC Bank, that had come into the portfolio last time around. But such have the fortunes changed that HDFC Bank has gone back, like it has fallen out of the ranks, and it has fallen out of the ranks so badly that it is not even qualifying to be filtered in the momentum stock. So if we look at the exits here, we can see BEL and HDFC Bank. We have exited HDFC Bank with a minor loss, BEL with a minor gain. So nothing much to change here. The average gain for winners has actually come down, and you can see the average gain for winners and for losers here. And in terms of the current portfolio, we have taken two new stocks. You can see them at the end, and one of these stocks we had exited previously as well. This is because of how the criterion for this portfolio is. So anything that drops beyond the top 10, we kick it out of the portfolio. Anything that comes into the top 10, we bring it into the portfolio. So Apollo Hospital, it had dropped down previously, so we had exited it in November only, and then after 1 month it is again coming back to the portfolio. So this kind of churn keeps happening in the portfolio. Again, whenever we are discussing stock names, none of these are to suggest or influence buying or selling action on your part. Okay, so do your own due diligence. Coming back to the let's take a look at the at our portfolio, right? And in terms of sectors, just look at how auto has performed, and this ties to the point here. You can see the chart for auto. It has decisively been languishing under the 200 DMA for some time now, the last couple of months. But these green shoots have started coming now. Whether it can give a sharp bounce back and it can take out the previous high, or whether it will again consolidate around the 200 DMA, we do not know as of yet. But there are some positive like news coming about around the auto sector. And if you look at the one day performance today as well, it is the best performing sector in today's market, right? So almost 3% up auto, while the next best is IT at 1.58. Surprisingly, pharma is negative today. If you look at the 1 year change for all of these indices, you can see pharma the best one at 35%. After that we have realty at 32%, and after that we actually have auto. So auto, because of the recent okay, I'm not sure what happened to IT here, for some reason it's not showing up here, but IT should be close. So auto has been a really good performing index over the last like few years. Like even in 3 years terms, you can see it is it is in the top three sectors. Okay, and even in the 1 year period, it is almost in the top three, top four sectors. So uh, it it has had a good run. If you see autos have actually performed pretty good over the past 3 years as well. So I'm personally not sure if they are going to take out this previous high in very much of a hurry. I feel that some sort of recovery, some sort of bounce back is coming in the auto, but like it may not take out the recent high too quickly. Anyway, if it starts building up, if it starts gaining momentum again, then we might see a lot of auto stocks coming into momentum portfolios as well. We had some fair bit of auto exposure. I think 2-3 stocks were present at various times in our core portfolio over the last year. We rotated out of those stocks as the sector started falling. So whenever a sector starts falling, the stocks start falling. So your strategy would rotate out of those stocks, and it would try to rotate into stocks where there is a potential for win, right? Whether that win materializes or doesn't materialize is a different thing, but that is why we rotated out of those stocks. But if the sector comes back into mojo again and these stocks start performing again, some of these stocks might again come back to the portfolio, and this is what you would have seen in your individual portfolios as well. As far as the Nifty top 10 is considered, we still have, so Mahindra and Mahindra has been in the portfolio for some time now. Okay, today it's 4.1% up. That's crazy. The stock is almost like at an all-time high, I think. But yeah, we had like Hero Motors as well. We had I think TVS Motor as well in this portfolio. Bajaj Auto was there in our core portfolio as well as the Nifty top 10 portfolio. So these stocks have rotated out of the core portfolio, but in the Nifty top 10, Mahindra and Mahindra has retained its place, and it's showing good momentum. Let's see where the industry, where the sector as a whole goes while going forward. Okay, so that's pretty much it for today's video. Hope you liked it. If you have any questions, please let us know in the comments below. What are your views about 2025? Which sectors, which stocks are going to perform? You can let us know in the comments below. See you in the next video. Till then, take care. Bye bye.